Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Monday, December 22nd, and this is your London Open Prep. Two themes stand out. Safe haven flows are back with gold at fresh records while the dollar softens into key data. And oil is catching a bid on renewed geopolitical jitters as Asia stocks edge higher after China left its lending rates unchanged. Let's start in Asia, where the People's Bank of China kept its 1- and 5-year loan prime rates steady, and regional equities rose as investors digested the hold. The tone spills into currencies. The US dollar index is easing after a 3-day climb, with traders eyeing third-quarter US growth figures due this week. A note of caution from the Federal Reserve remains in the mix, with a senior official pushing back on near-term cuts, but markets are leaning toward easier policy next year, after softer inflation and cooler jobs data. In India, the rupee holds last week's gains after the central bank stepped in across spot and forward markets. Safe haven dynamics are front and center. Gold has surged to an all-time high near the mid-4,000s, while silver has also printed a record. The Japanese yen is firmer on safety demand and renewed warnings from Tokyo about sharp currency moves, keeping dollar-yen under pressure. Europe's common currency is steady to firmer against the dollar, while euro sterling is softer ahead of the UK's growth update, and dollar franc is slipping as Switzerland's sentiment survey approaches. Commodities are lively too. U.S. crude has jumped back above the high 50s after reports of a U.S. interception of a Venezuelan tanker and lingering tension between Israel and Iran, rebuilding a modest risk premium. That combination, plus the softer dollar, is supportive for the broader metals complex and for risk tone in Asia. Even as the safety bid in gold reminds us the backdrop is uneasy, in the commodity and currency block, the Australian dollar is holding gains after the China rate decision and a softer greenback, and the New Zealand dollar is bouncing from recent lows on improved risk sentiment. The Canadian dollar is the laggard, with dollar CAD holding Friday's strength as concerns about household spending weigh. Crypto chatter is more cautious, with one analysis flagging potential near-term pullbacks in Bitcoin and Ether. Looking ahead, it's not a heavy calendar today, but there are a few markers: UK GDP and Switzerland's ZW survey on deck. Then the US third-quarter GDP update tomorrow will be the main macro test into the holiday stretch. Policy remarks can still shift the tone in thin year-end liquidity. What I'll be watching today: dollar-yen for a downtrend if safety flows persist and officials keep talking tough on volatility. The Aussie against the US dollar for an uptrend if China's steady hand and a soft dollar continue to support risk. Dollar CAD for a grind higher if the Canadian dollar underperforms. And West Texas Intermediate for follow-through on the upside if geopolitical headlines keep the risk premium in place. I'll also keep an eye on euro sterling around the UK data, and gold to see if momentum holds at these record levels. In short, markets are cautiously constructive, but the balance between geopolitics and data will set the tone as we move through a thin pre-holiday week. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.